Thank you for joining us at xm.com for this Forex Preview video. We'll be having a look at Australian data and how the Aussie will be affected. I'm Christina Marujos. Joining me today is Marios Hadjikyriacos, investment analyst. Now, Marios, Australia has been plagued by the bushfires in the past few months, and adding to that now the coronavirus outbreak and all its implications on the economy and on trade. Now, the country is reporting wage growth data for Q4 on Wednesday, followed by the employment data on Thursday. What are we expecting to see in these reports?
Not much really from the forecasts at least. So wage growth is expected to have risen at the same pace as previously. The employment report is expected to be average. Now, what I think is important here is that all of this data reflect the pre-virus period. Now, if you remember, the virus headlines and virus uncertainty really started to show up in the last days of January. So the January data will probably not reflect much impact from the coronavirus. Now, where am I getting here? I think that the risks surrounding the Aussie from this data are tilted to the downside. And the logic is this. If we get stronger than expected data this week, the market might see that, investors might see that and say, that's good, but we really don't know if the economy took a severe hit in February, right? So the situation might have been good in January, but who knows what happened after the virus and that uncertainty hit. So if we do get stronger data, any upside reaction in the Aussie might be relatively limited, in my view. Now, on the other hand, if we get soft data, that could tell the market, look at that. The economy was already losing steam before the virus. The situation might be even worse right now, so that could trigger a bigger negative reaction in the Aussie, in my opinion.
I see. And speaking of the Aussie, now it already suffered some collateral damage from the coronavirus outbreak, and markets are expecting an RBA rate cut this year. Is there any chance the Aussie can make a spectacular or at least a positive rebound?
Here's the thing about the Aussie. So we've really seen it collapse lately. That has been on the back of expectations for a slowdown in China. Australia and China are very close trading partners, so a slowdown in China equals to a slowdown in Australia. At the same time, we've seen commodity prices collapse. Australia exports commodities, so it's a perfect storm for the Australian dollar. Now, as far as the market is so focused on the virus and its implications for China and Australia, I think that any rallies in the Aussie will be relatively limited, or short-lived. However, we've already seen the Aussie lose a lot of ground. It's already trading near 10-year lows. And that 10-year low level has held despite virus concerns, falling commodity prices, bushfires, and so on. So I think while I don't expect any rally from the Aussie from here, I don't expect any significant losses either. So I think that it will take something huge to break that 10-year low. So we might see a disappointment on the jobs data that could see the Aussie fall to test that 10-year low, but I'm not sure if it will break below that level. Now, where am I getting here? I don't see any spectacular rallies in the Aussie, but I don't see any spectacular losses from here either. And it will be very important to see whether the market will break below that 10-year low level. If it does, that would be the signal for more losses.
I see. Marios, thank you for joining me today. And thank you for watching this Forex Preview here at xm.com.